So I'm going to talk about my secrets to trading success today. Some of the things that have just helped me to be successful. So go ahead and get started. And of course, first the disclaimer, and that is, this is educational. That's the intention today. I don't know your financial situation. I'm not your financial advisor or your CPA, and so I'm not making any specific recommendations. Again, this is for educational purposes. So what I'd like to cover today, I'm going to walk through three areas that have really helped me to be successful. First is how I scan and find just the best of the best trade setups in the market, how I identify the highest potential winning trades, and then once I have a trade on, how I manage them. And to get into that, I'm going to walk through some of the tools that I use in my scanning and in my analysis. I'm going to go through this pretty fast. There is going to be a recording of this. You'll get a link to that in your email, and you can download the PDF of my presentation and read anytime if you want to post the link to download this. You just put in your first name, your email, and it'll show up in your inbox, a PDF of this presentation that I'm doing right now. So I use three key tools in my analysis and in my trading. I use Dow theory, Elliott wave theory, and as part of Elliott wave I use Fibonacci retracements and extensions, and I use the applied reality trading software, the ART software from traderscoach.com. And again, I work with traderscoach.com. I'm their head coach. So Dow theory, this is a real simplified view of Dow theory, but I like to simplify it and just pick out the part that can really help me in my trading. And as you can see, you know, a simple part of Dow theory tells us that a bull trend is a series of higher highs, higher lows, higher highs, higher lows. Right? And as long as that pattern holds, the bull trend is in effect. And opposite of that is the bear trend. As long as we're making lower lows, lower highs, lower lows, lower highs, the bear trend is in effect. So the bull trend ends when we put in, you know, we've had a series of higher highs, higher lows, and we put in a lower high, and then we come and take out the previous low. That's a signal that the bull trend is ending. And you can see in a bear trend, same thing. Once we put in a higher low and we go take out that previous high, that's a signal that the bear trend has ended and that an uptrend may be beginning. And you can see the end of a bull trend is identical to the start of a bear trend, and the end of a bear trend looks just like the start of a bull trend. Say that fast, 10 times. So Elliott wave theory. So I use Elliott wave theory. So Ralph Nelson Elliott, he developed this theory back in the 30s. And the principle says that collective investor psychology or crowd psychology moves between optimism and pessimism in natural sequences or waves, a series of impulsive and then corrective waves. So I really like to find trades in these impulsive waves, which are wave 3 and wave 5. I'll take a corrective wave trade every now and then, but it's just got to be perfect. There's got to be a really good return, a really good reason to do it, and I really spend most of my time looking for impulsive wave trades. And these, you could mirror this and flip it down, because this pattern holds whether it's going up in a bull trend or whether it's going down in a bear trend. And I trade both bullish and bearish markets. I said I use Fibonacci numbers. I use both Fibonacci retracements and extensions. So Fibonacci numbers are some special numbers, and they were discovered by Leonardo Fibonacci, Italian mathematician from the Middle Ages. And the sequence, you know, goes like this: 0, 1, 1, 2, 3, 5, 8. It's, you know, the number plus the number before it gives you the next number in the sequence. And there's also Fibonacci ratios, which are important, and they're the ratios of one number in the position to other number positions in the sequence. So you can see here a number divided by the previous number is 1.618, by the next highest number is 0.618, et cetera, et cetera. And this ratio of 0.6180 is called the golden ratio, and it's all around us in the natural world, and snail shells, pineapple scales, spiral galaxies, hurricanes, and we see it apply to other complex systems like the stock market. So how does this work? So Fibonacci retracements, they're used extensively in technical analysis of stock charts. And stocks do not move up or down in straight lines, but they move in a series of waves that often begin or terminate at or near Fibonacci retracement or extension levels. So you can see we had a strong initial wave up, and then a move down, and it moved right down into a Fibonacci retracement area between 38.2 and 61.8. So when I see that happen, that tells me that a chart is falling into a pattern that may have a predictable next move. And that next move could be what's known as a Fibonacci extension. So this extension from the retracement area, remember we had a move up, a retracement down, a corrective wave, and the next impulsive move up has a high likelihood of going into a Fibonacci extension level, which is 61.8 to 100%. And when I see this, and when I see proof that it's going to start up, that gives me a price target zone that I can then use in my calculations in deciding whether or not to take the trade. So Elliott and Dow, bringing these theories together, I think they go hand in hand. And if you notice on this chart, we've got on the top the line, the Elliott wave sequence, the 5-wave sequence going up. And then if you look at the very bottom, you can see that stocks don't move in those kind of straight lines, or no instruments do. That price is moving in that sequence of higher highs, higher lows, higher highs, higher lows. That's described by Dow theory, and then when it moves down, it does the same thing in terms of lower lows, lower highs, and more lower lows. So that helps me tell when these impulsive waves and these corrective waves may be ending and going into the next wave. I like to say that the market talks to us, and it tells us what's coming up next as these waves of optimism and pessimism play out. I also said I use the applied reality trading software, and I just find this incredibly useful to help me in identifying wave counts and managing my trade. There's some key features here. There's these pyramid trading points, which indicate really important higher high, higher low sequences, and they give us really good levels for support and for resistance. There are art reversal bars, you can see pointing there, and it's key reversal points, and I use those primarily for scaling out. Once I'm in a trade and I see a key reversal and I'm in profit, I use those levels to scale out, to reduce my position size, take some profit, and reduce risk. The optimum wave locator, it helps me with Elliott wave count. It's a histogram, and it shows the momentum of a particular wave. And so that helps me in doing my wave count and finding out when it's turning around. Like you can see here, when this down move is really confirmed when the algo goes down. And then the precision trend filter is really just trend confirmation. It's real simple. When it's green, it's predicting more highs. When it's red, it's predicting more lows. And when it's yellow, it's neutral. So I use that software every day in my trading. So using just these simple tools that I've talked about already, I saw a bearish pattern last summer forming on the Dow, and this is the Dow Jones daily chart, and this is a snapshot as of July 18th.
Love you, honey.
Sounds like somebody's got an open mic. We love you too. Not sure who that is. Okay, so this is the Dow Jones daily chart as of July 18th, and I actually posted a YouTube video, and kind of went public with my analysis on this. And I said that I saw a pattern forming. That it broke out of a previous channel, and it was making some new lower lows, lower highs, lower lows. And I said, if that high holds, and if that low's taken out, I think there's a bearish move starting, and it was pretty clear. And so that was on July 18th. August 8th, I posted an update and I said, hey, I think it's happening. I think it happened, right? Because that high did hold and that low was taken out. And again, I posted that YouTube. There's a link there. And if you download the PDF, you can go look at the YouTube video. Check it out. So, did it work? Absolutely. You remember what happened back in August, right? That bearish pattern absolutely, predicted what was going to happen, and we had a really sharp decline in the major indexes. So I think these tools work, and not just in this case. Again, I'm very profitable as a trader, and these are the tools I use, and I'm sharing my secrets with you. I run a stock picking service, and based on my analysis that I just showed you, I started taking some short trades, and I was publishing them to my stock pick subscribers. So based on that analysis, here's Ingersoll Rand. We took a short on July 27th, and how nice is it to get in on a price bar and have it just gap down massively the next day. But that doesn't always happen, obviously, but it sure is fun when it does. And that was a great trade, and we were really profitable. And again, the same analysis, I saw that trend taking place on the index, and then I go looking for individual trades, and I've got to see a pattern on the individual trade, and I sure did here. You can see that sequence of a lower low, lower high, and a new low, and it that combined with all the rest of the analysis, gave me all my criteria to get in, and that was a good one. Here's another one. This was Goldman Sachs. We took this short on August 11th. And again, pretty dramatic move down, and we did really, really well on that one as well. So that's the tools I use. And if you have questions, feel free to type them in as we go here, and I'll try and field them and keep moving too. Because I'm going to move into a new area of scanning, how I scan for stocks. Now that I've wrapped up the tools that I use. So there's three things that are part of my scanning. First is I do want to identify the overall trend. You've heard that. You heard it with the last speaker if you were on. The trend is your friend, and you want to be with the trend. I kind of equate that to being in a boat. You certainly want to be moving with the current, with the tide, with the wind. That just makes it easier and you move faster. I do go counter trend occasionally, but I really prefer to trade with the trend. Why not? And the other thing I do is I identify what trend the market is in. Is it bullish? Is it bearish? Or is it stuck in the channel? And then as part of my scanning, right? Once I know the overall market trend, then I go look for sectors that are either participating in that trend or they're doing something different. And then I look within that sector for specific charts, specific companies and stocks or ETFs to trade that meet my criteria. All right, got a couple questions coming in. Can you show the trend now for the SPX? Hey, we're going to look at that toward the end of the presentation. I'll show my update on the actual market right now. All right. Next slide here. So here's a market trend example. If we look back to June 30th, this was an example I put together just of how to scan, right? So this isn't a current look right now, but this highlights the method that I use. So here we are on June 30th, and at that point, S&P 500 is absolutely stuck in a channel, and it had been since March. You can see the dashed lines are the upper and lower boundaries, and it just been going back and forth, back and forth. Now it's a tough period. It's tough to make profit, on larger time frames when the market is just channeling like that. So there's my conclusion: market stuck in a channel. So then I go look for sectors that are either, I'm not going to look for sectors that are in a channel. I'm looking for sectors that are trending. Okay, so I look at sectors. Here's the iShares sector ETF page. This is a good thing to look at. Morningstar's got one like this. All I'm really interested in is at that same time frame, June 30th, are there sectors that are outperforming the market or that seem to be trending? In this case, it was this healthcare, biotech, pharma, all of them. The market was flat, even down a few points, and these are up 21, 20, 9, 15, 10. So it looks like here's a sector that's taken off. So I'm going to go now look for individual stocks in each of their sectors, right? And there's a question: do I just trade stocks or do I look at forex? I don't look at forex. I primarily trade stocks and options. That's where my picking service is focused on. I do trade futures intraday, and I'm going to show an intraday futures example here in a minute. So now that I've got some sectors that are interesting, I'm going to go scan for price patterns that meet my criteria. And I'm looking for two specific patterns. I either want a channel breakout and a new trend that's starting, or I want an Elliott wave 5, right? Because then you got 4 waves before that, which gives you a strong basis to form a thesis for what's going to happen in wave 5. So that's a trend continuation, and that can be bullish or bearish. So here's an example, right? This is Merge Healthcare as of 6:30. This time period for my example. And this is a potential Elliott wave 5 pattern. This is a pattern I look for, and it's pretty simple to scan for, because all you really need is a big dramatic move. That's wave 3, and you go, oh, it's off the chart here, but there was a move up, a move down. I'm not drawing very well, right? That's wave 1, wave 2, wave 3. We've got a correction. It looks like it's starting up. That could be wave 5. I'm just looking for a pattern like that, and then I'm going to measure it specifically and see if it meets my criteria. And here's how I identify with my criteria. I want it to be a high potential trade. And what am I looking for in a high potential trade? I want a high probability of winning. Not every trade wins, but I'm only going to take ones that have a high potential to win. That just makes sense. I want some clear support resistance areas so that I can use risk management, my stop placement. I never go into a trade without a predetermined stop, and you're going to see how I do the math on that in a minute here. But I need a clear support or resistance level to put my stop. Right? It's got to be based on the trade. It's got to be based on the reality of the chart. And I want a high return. I want the reward to risk ratio to be high. Those are the things I look for. I check off before I take a trade. So here we got a pattern on this Merge Healthcare chart. It looks pretty good. I've used my Fibonacci retracements, and it looks, oh look, wave 4 retraced right into the wave 4 corrective wave zone, 38.2 to 61.8. That's good news. I've got Fibonacci extensions that have a wave 5 target zone for the price up there again, 61.8 to 100. And I've got some evidence that wave 5 might be starting, right? I've got, down here on this optimum wave locator, it's showing, it's going green. My precision trend filter says, hey, we were predicting more highs, right? And I've made a new high, and I've started pulling back. So what do I need? If you remember Dow theory, right? I got a new high. I want to see a lower high and then a new higher high. I want to see this pattern confirm that a new uptrend is starting. Okay, so that was on 6:30. Here on 7:17, we got it. There it is. You can see. I'll go to green here on my pen, right? We went down. We did this, right? And we put in a new high. So that's exactly what I'm looking for. So great. I've got confirmation that wave 5 is underway. Now, and I've got all the data that I need here now for my next step, right? I've got an entry price right there where it put in a new high. So the entry price is $5. I've got a stop level down at the previous low, okay, 444, and I've got a target price. I use the minimum from the price target zone, so I use the lower one because I want to be a little conservative in my calculations here. But I've got an entry price, a stop price, and a target price. Now I can do a little math on this. Remember I said I want a high reward to risk ratio. So I calculate first the risk per share, and that's simply the entry minus the stop. And that gives us a risk per share of 56 cents. That's pretty simple. I look at the reward per share, right? My low target, again being conservative, is 664, entry price 5. I just do the subtraction there, and my reward, potential reward, is $1.64. And now I do the reward to risk ratio, and that comes out at 2.93. So nearly 3 to 1. I have a chance of winning 3 times more than I have of losing. I like those stats. That works for me completely, right? The minimum I'll use is 1.2, and that's got to be a really highly probable trade. I like to get them, you know, up over 2, 3, 4, right? Of course, you want to make as much as possible on each trade. And so my potential profit here at the low end of the target zone is a 33% return on the trade. If it hits the high end of the zone, it'll be a 63% return on the trade. So this all works for me. I'm good to go. So now, once I take this trade, now how do I manage it? This is important too. I don't go into a trade unless I have a predetermined plan about what I'm going to do, both in terms of my stop and then where I would get out. That's why I have, you know, a target zone, a stop level, entry level, right? And I scale out of my trades at key levels. I want to lock in profit because things can happen. News can break out, earnings reports can come out, who knows, right? And you could be in profit and it could, you know, gap down and turn around on you and do all kinds of stuff. So I like to lock in profit as I go. And then I scale out in thirds. So I'll take a third off and then another third, and then I'll stay with the final third until the trend actually tells me that it is over. Right. So my first scale out here was 1/3 as it crossed that first Fibonacci line there at 568. And then I exited the trade up in the price target zone. And you can see that's a really funny price pattern. It gapped way up and then it went totally flat. And the reason was that IBM announced they were going to acquire Merge Healthcare at $7.10. So guess what? It's not going any higher than that. So it was time to get out. And you can see at the bottom here, I made 34% profit in 4 weeks on Merge. And this is one I had published to my subscribers. So that worked. That's how I pick trades, how I evaluate trades, and how I manage trades. If you look, you know, a more typical move, you know, to have it gap up and then go flat is kind of unusual. So here's a chart of Tesla. But who would have liked to have been in that trade? So you can see here what I do to manage the trade. I do scale out at key levels as it crosses key Fibonacci levels and as reversals are formed once I'm in profit. But I trail my stops up, and I trail them up as the market makes new higher highs. I trail them up to the previous higher low, if that makes sense. So it has to go make the new high, and then I'll trail my stop up. And I just keep trailing it up and staying with the trend, you know, scale out the first 2/3 and then keep the final third on until the market tells me that the trend is over, right? So I move my stop up, get up to the top of this trend, and finally the pattern reverses, right? We get a higher low, lower high, and then a new lower low, and we're taken out with the stop for great profit. So again, I never enter a trade without having a clear plan about how to manage it once I'm in it. Okay. Couple questions I'll field. Do all the stocks that you trade have options? Not all, almost all of them. I do trade some small cap stocks that don't have an options market. I really prefer to trade with options. All I do, I just buy puts, I buy calls. It's that simple. I don't get into spreads and all the winged creatures, as I call them. I just keep it simple and buy puts, buy calls. And I would say probably 70–80% of my picks have options that I recommend specific options contracts. Do I use trailing stops? I trail them manually. I let the chart tell me what to do. So, you know, I don't use an auto trailing feature, you know, based on percentage or price or something like that. I use the realities of the chart, and as it plays out, I move them to the new support or resistance level. I'm going to keep moving. One more question. Do I trade in the money? Yeah, when I choose options, Mike, I choose in the money, and I try and get as high a delta as possible. All right. And one last question on that from Paul. How far out do the options go? I use the chart. You know, I use the timing on the chart. You know, how long did it take for specific patterns to form? You know, some stocks move a lot faster than others, and you know, of course, you can see it on the chart. So I want time on my option contract on my plays so that I'm going to, you know, close the trade, hit my target before we get into that rapid price decay at the end of the contract. All right, I'm going to keep moving here. Okay, I'm going to give you a setup, my specific setup. We kind of alluded to it, but I want to, I want to walk away with you giving this to you. Again, one of my secrets. I said there's two primary setups I look for: a channel breakout and a new trend, and that's where Elliott wave 3s often start, and then Elliott wave 5. So this is the highest probability one because you got so much data beforehand, right? You got 4 waves that have been confirmed, and I don't get into the 5th wave until it's proven that it's starting. So this Elliott wave 5 trend continuation. Here's my setup for it, right? I have 4 criteria. It's easy to spot, and it's a high probability setup. So, first you got to have a wave 3. That's, when I look at a chart, I go, is there a wave 3 there? And wave 3 should be easy to spot. It's the biggest, most dramatic price move on the chart, right? And just a note on Elliott wave. I know a lot of people are skeptical about Elliott wave, or they say it's too complicated, and that Elliottians can never agree on wave count. Yeah, I think Bennett McDowell of TradersCoach.com has done a phenomenal job of modernizing Elliott wave techniques and creating software to help with that. And he just released a new book. I was privileged to contribute to it. It's called Elliott Wave Simplified. It'll be available on Amazon at the first of the year. And he also offers a Elliott wave course, which is a great home study course. I learned, he was my mentor, and if you don't have a mentor, you should get one. It's really important in trading to have somebody to teach you. But Bennett, has a very simple method of analyzing Elliott waves. He taught me to do it. We've both taught. We've coached dozens, hundreds of students, and we all can label our waves exactly the same. If you look at a chart that Bennett's marking up, or that I'm marking up, or that one of my students is marking up, we're going to be within a few ticks of each other, and we're going to be calling the waves at the same place because we just keep it really simple and repeatable. So my favorite setup, Elliott wave 5. So you got to have a wave 3. It's the biggest price move. I want to see a wave 1 and 2 before wave 3. And a simple rule for wave 2 is it cannot retrace beyond the start of wave 1. I want to see wave 4 retrace to a Fibonacci retracement level. And I want to see wave 5 prove that it has begun. Again, using the Dow theory. All right, I'm gonna keep going. I see a couple questions coming in. I'm gonna walk through this setup, and then I'll come back to a couple questions here. Okay. So here's an example from September, and this is an intraday chart. This is the E-mini on a 2-minute chart. It's just a nice way to illustrate this setup that I'm giving you. Right. So here we go. E-mini opens. Sitting here in a channel after the open. I'm on the West Coast. I'm in Washington State, so the market opens at 6:30 for me. It bounced around, then it settled into a channel. All right. But then it broke out into this really big, strong move right here, and that's a clear wave 3 for me. Again, wave 3. You don't have to get all complicated about it. It's the biggest, strongest move on the chart you're looking at. So there's wave 3. All right. Here's my criteria. I said I got to have wave 3 be present. It's the biggest move on the chart. I got to see a wave 1 and 2. Right? Well, there they are. Right? Nothing fancy about it. And just the rule is wave 2 cannot retrace below the start of wave 1. This one did not. Great. We got a wave 1. We got 2 of my criteria met. 3. I want to see wave 4 retrace to Fibonacci retracement levels. So this one did it. Right, smack dab right into the 38.2 to 61.8. Perfect. No trade yet, though, right? We're still waiting for wave 5, and I got to see proof that starts. And there it is, right? There's the proof, right? We got a new high, a higher low, and a high taken out, right? Wave 5 proved that it is starting by breaking and putting in a new high, and there we got a long entry on this trade at 1940. Perfect. So once we're in the trade, then we manage it, right? Got my long entry at 1940, right? I trail my stops. Again, as new higher highs are put in, I trail my stops up to the previous lows. I scaled as it crossed the first Fibonacci line after the entry. In this case, it got into the price target zone at 61.8. And then the market, closed at 1 o'clock. I was still in. I don't want to hold, futures overnight, so I exit the trade. And that's a pretty nice one, right? We weren't in that very long, and based on 3 contracts, You know, based on scaling out at entry 1940, scale at 1946, close at 1950, $1,300 E-mini trade in a couple hours. So, and again, with minimal loss because we had our stop in place. Okay, do I have something current? You bet, Susan, it's coming. And Abdul, you asked what software I use. I use the Applied Reality trading software from traderscoach.com. It's in my presentation. If you want to get the PDF of that, there should be a link from Reed to download that. And yeah, we got some current ones coming. All right. Coming right now, in fact. So I've walked through, I've showed you how I scan and find the best of the best, how I identify high potential winning trades, the rules I use, how I manage trades. I gave you a setup, my favorite setup. So let's look at the current market. So here's the Dow Jones. So I don't have a chart of the SPY, but it's going to be very similar, right? So this is a monthly chart, and I really wanted to just take a moment and point this out, right? So I publish a weekly newsletter, and in fact, this would be a good time, Reed, if you could post the link. I've got a free weekly newsletter. It's called Beyond the Noise. And I try to look beyond the noise of the headlines and the news and all that, and just look at the reality of the charts. So I encourage you to subscribe if you like. It's free, and get my analysis up every week. I do a write-up and a video where I go over charts every week. So if you look at this chart, get a color that's going to show up here. All right, red. All right. The market moves in cycles, right? We had this big, run up for the .com. We had the .com correction, and we had the next run up. We had this 08 pretty nasty correction, right, from the the mortgage banking thing, right? And now we've had a 6-year bull market. Right? And look at this this latest move. Again, this is a monthly chart. Every price bar is a month. But we had a low, and right now we've got a lower high. So this is kind of a critical period. It could go take out this high and put in some new highs. If it does, I don't think they're going to be very high. I think the bearish market has started, right? And it could reverse from here and start doing this. And here's the correction zone. This would be a normal, healthy correction, very consistent with the rest of the pattern that we're seeing here for the Dow to correct down to 14,000 to about 11,000. And there'd be a lot of profit to be made. One of the things you can notice is these corrections are shorter in time, right, and more dramatic than the uptrends. So I'm waiting for confirmation for this to happen. I do think it's heading down. It may put in some minor highs, but this is ready to correct, and a lot of the technical indicators are showing it. And there's going to be a lot of money to be made in a dramatic down move, either by buying puts or with instruments that go up when the market typically goes down. Some of your VIX ETFs and potentially gold could turn around and head back up, stuff like that. So there's lots of trades coming when the market proves that it's going to start correcting, which it hasn't done yet, but I think it is coming. Here's a current open trade. I think it was Susan asked, hey, do you got something current? Absolutely. Here's a trade we got open right now. This is one that I picked for my subscribers. I published, and we are still in it. So this is Southwest Airlines, and this is as of Friday, so that's pretty current. This was just such a clear trade, just like I showed you with the setup before, my criteria, right? Got a really nice wave 3, perfect retracement of wave 4 down into the Fibonacci retracement zone. Got a nice target up here in wave 5. This one, it was just doesn't get much better, right? We got our entry here at 40.57. We had an initial stop set at 36.94. We've moved our stop now up to 44.66, and we've scaled out twice already. And you can see my current stop is above my entry price. So, and we've already scaled out twice. We got profit locked in on this one. I think we're like 35% profit on this one so far. And now we just let this final third run up until the trend tells us over. The high probability is it's going up into the target zone. But even if it doesn't, I'm just gonna trail my stop up, and I publish those to my subscribers up. And when the reality tells me, when the chart tells me the trend's over, we'll be out, and we'll book our profit on this one. So that's Southwest Airlines. That's a live trade we're in right now. Okay. Oh, Susan, you are welcome. You bet. All right, just scanning through the questions to see if, Peter, will Fibonacci and Elliott wave work on any time frame? Absolutely, absolutely. You know, I always kind of smile when you hear educators go, you know, my system works on any time frame, any instrument. I like to say most. I like to say most, right? There are some unique instruments and some unique time frames, but these methods I'm using, I use them on intraday 2-minute futures charts. I use them on daily stock charts, and you know, I do the chart analysis. I pick options based on this. I've used it on a lot of different time frames and instruments, and they even work if you like trading like intraday, like range charts or tick charts. The same principles apply. So absolutely, yeah. Scanning some more questions here. What's the target price for love? It's between. I got the. Let me go back a slide here. It's between 52.87 to 66.18 is my target zone for Southwest Airlines. Not a recommendation to buy. Future results are not guaranteed. I'm not your financial advisor, but I'm in it. Okay. 100% of what? It's 100% of the extension from these last 3 waves. That's the Fibonacci extension. Okay. So here's my results year to date. Just updated this. So Friday, it's funny, the Dow closed exactly flat. So the Dow is exactly at 0.00 gain. The S&P is up 0.3%. My trades year to date are 25.38. And these are trades that I'm publishing to my subscribers and that I'm taking myself. And an important part of my approach is my emphasis on risk management and I'm minimizing my exposure to losses. Got to have a good win rate. You know, my historical win rate is about 65%. So about 65% of the trades I take win, and then my payoff ratio is about 2.7 to 1. So the winners win 2.7 times more money than the losers lose. So those are the key statistics, I think, to being successful, right? Have a high win rate, have a high payout ratio, and use strict, highly disciplined risk management so that when you do take losses, they're small and contained. Of course, past results, no guarantee of future performance. All trading involves risk. We can see my 3-year history here. I made 25% this year in a really tough market. Last year, 37. Year before, 57. You know, the market was trending pretty hard. It was a little easier. This is a tough market. I think it's going to start trending down, and we're going to really do well next year. So, you know, what do you get with my stock pick subscription? I publish 1 to 2 picks a week. These are ones that I think are the best of the best. They're ones I'm trading with my own money. They include option contract details when it's applicable. I say 70–80% of them have options. I give specifics on the strike price, the time, and the price that I'm willing to buy it at. I give updates every week. Those include a narrative on how the trade's playing out, when we move our stop, when we're scaling out, and often I'll send a quick update midweek. You know, it doesn't just come out once a week. I'll give a quick update to my subscribers if there's something going on. Okay. And I got a special offer, and Reed, if you'd post the link for that. So people all over the world are paying $97 a month for my stock picks, and you can see my record. My subscribers think that's worth it. I'm offering a discount, so people who are attending this webinar, I'm offering a 20% discount. So $77 a month for as long as you have a current subscription, and that is a 10-day money-back guarantee. So you can try it, and within 10 days you're going to get 2 picks. I publish them every Sunday, so you're going to get 2 different weeks of picks and updates. You really get a sense of how it works, and if within 10 days you don't like it, give you your money back, full refund, no questions asked. And also, it includes a 30-minute one-on-one phone consultation with me if you would like to ask any questions about how I pick stocks, about how to use my website, how to use my picks, anything. If you want to know how the Seahawks are going to do this year, whatever. You get a link when you subscribe, and there's a link to go book a session if you choose, and we'll get on the phone or on Skype and we'll talk. I'd be happy to answer any question that you have. So I got some great picks coming up tomorrow. I'm publishing them tomorrow on Sunday, and I think there's some really good ones. So act now if you want to see them. All right, our options on the weekly update. You bet. I think that's J-Mini. J-Mini. Yeah. Yes, I give option specifications when there's an option market for one of my picks. DEX, are these position swing or some short term? I would call it position trading, trend trading, right? On daily charts. So all my picks are on daily charts for stocks and ETF. Okay. Typical trade size, Daryl Cornett. So that's really based on your account size, Daryl. So I actually have a couple of videos when you subscribe where you can look at my recommendations for risk management. So trade size is determined by two things, your account size and then the distance between the entry and the stop. So we figure out the loss per price, the loss per share potential if it hits the stop, and then I recommend 2% of your account. So you divide that into 2% of your account, and that determines the position size to take, so that if it hits the stop, we only lose 2% of our account. And again, you got access to a video that really goes through and shows you how to do that. Okay. Just scanning for questions. Yeah, how we doing?
You got about a minute remaining.
Okay, great. Just one more question. Robert's asking, how many positions do you carry simultaneously? It depends on the market, how fast it's moving. You know, when the market's channeling, we accumulate a few more positions. I would say the max we've been in is about 8 at one time, and the minimum is about 2. So that's the range. Okay. And no, I don't. In my stock picking service, I don't do futures. Okay. The pick service is daily stock charts and then option contracts for those. All right. Well, I guess I'm out of time. Thank you, traders, for your questions, for your attention. Again, you can download the PDF. There'll be a recording coming, and you can sign up for my newsletter and check out the subscription. It's really no risk, right? Money back guarantee within the first 10 days if it doesn't work out for you.